So you got $100,000 and you're thinking, where do I put this to work? Do you throw it in the real estate market, use a DSCR loan and get a cash flow rental? Or do I take that 100,000 bucks and dump it into the stock market and try to ride the wave? Well, let's break this down the right way. Because here's the thing, most people don't actually know how to measure returns. They just hear the stock market averages 8% a year and think that that's the move. But real estate works a little bit differently. Real estate is leveraged money, meaning your cash on cash return can blow traditional investments straight up out of the water, if you structure it right. But before we get into that, let's talk about where this 100K is actually coming from, because most people don't have 100,000 bucks just laying around in their bank account. Now, if you're watching this, you probably have some equity in your home, and you're thinking, how do I pull that out and make it work for me? So let's start there. Let's say you own a home and you've got at least 100,000 bucks in equity. You go to your bank and say, hey buddy, I want to pull out a HELOC or a home equity loan. Right now, home equity loans are running at around 7 to 8% interest. That means for every $100,000 you borrow, it costs you about 700 bucks per month. Now, the biggest mistake people make is they don't factor in the cost of that money. You can't just take out 100,000 bucks, buy a property and act like that money was free. Nope. You got to account for that 700 bucks monthly payment. So now let's take that borrowed $100,000 and put it into real estate. Let's say we take that 100K and we use it as a 20% down payment on a DSCR property in, let's say, Phoenix, Arizona. That home cost you 500,000 bucks. You're going to put down $100,000 and you're financing $400,000 at 8% interest. Your monthly mortgage, including principal, interest, taxes, and insurance, is going to be around $3,850 per month. Rent on that same property is about $3,800. So on paper, you're negative 50 bucks in cash flow. Wait, Ramin, you're telling me I'm losing money? How is that a good investment? Well, here's where cash on cash return comes in. You're putting in $100,000, but we're controlling a $500,000 asset. And real estate doesn't just make money from cash flow. It makes money in 4 different ways. 1, appreciation. If that house goes up 5% per year, that's $25,000 in equity growth every year on a $500,000 asset, not just your 100K investment. 2, loan pay down. Your tenants are paying down your $400,000 mortgage every single month. 3, tax benefits, depreciation, expense write-offs, and all the good stuff that reduces your taxable income. 4, cash flow. Even if you're slightly negative at first, you can raise rent over time. Now, let's calculate your actual cash on cash return, a common term used by investors. Even if you're only breaking even on cash flow, your appreciation alone could be 25,000 bucks a year. That's a 25% return on your $100,000 investment. Before tax benefits and loan paydown, compare that to the stock market's 8% average return, and suddenly real estate starts looking real good. But now let's flip it. What if instead of using $100,000 for a rental, you just took it and dumped it into the stock market? Let's say you buy $100,000 of an S&P 500 index fund. That grows at about 8% per year. That means after year 1, you've made $8,000. Great. But what if you need to pull that money out? If the market takes a dive, your 100K could drop to 80K overnight. Now, compare that to real estate. If home prices drop 10% in a year, sure, your home value might drop from $500,000 to $450,000, but you're still collecting rent, still paying down your loan, and you're still getting tax benefits. And here's where real estate crushes the stock market leverage. In stocks, your 100K buys you 100K worth of stocks. In real estate, your 100K buys you 500K asset. That means even a small 5% increase in property value, it's $25,000 gains on a $500,000 house, which is 25% return on your $100,000 investment. You might want to rewind that so you hear it again. Meanwhile, that same 100K in stocks only made you 8,000 bucks. And we haven't even talked about cash flow reinvestment. If your rental is generating even 200 bucks a month in net cash flow, that's 2,400 bucks a year that you can reinvest in stocks. You don't get cash flow. You have to sell shares to make money. Don't forget the capital gains. So what's the real takeaway here? If you're looking for safety, liquidity, and an easy way to invest, well, the stock market is perfect. But if you're looking for long-term wealth, passive income, and leverage growth, real estate wins every time. Now, I know what some of you are thinking. Okay, but what if I don't want to take out a loan against my house? That's a great question. That's why in my next video, I'm breaking down exactly how to invest in real estate with no money down. That's right, no savings, no problem. I'm going to show you how to use creative financing, DSCR strategies, and partnerships to start investing, even if you don't have a dime in the bank. So click right here to watch that now. I'll see you over there. You got to click it. Listen, you got to click it or I won't see you. Please, just click the video.